Hi everyone, Zach Friesen from Finance Pro here, and today we're going to be talking about 4 mutual funds that I'm invested in right now. First of all, I'd like to say that I took all my money out of the stock market a couple weeks ago because I wanted to switch from Robinhood into Fidelity, and I figured that why not, go out while the market's doing good and try to enter back in when it was doing bad. And I usually preach time in the market versus timing the market, and that kind of goes against my principles, but I figure I could justify it because I wanted to switch brokerages. I did that and I got in while the market was bad, and now I'm doing well. I just wanted to preface it. So I just scaled my money into my Roth IRA in Fidelity, and then also into an investment account with about 33% of my money, and just to play around just for fun, and then 66% into my Roth IRA. So all the stocks that I'm holding in my investment account, that is about 33% of my money in the stock market, are all high dividend stocks. I want that to be kind of my dividend account. So if you guys want to see what dividend stocks I'm holding right now, just comment down below and I'll definitely do a video on it. You might be wondering, Zach, what is a mutual fund? Well, this is the best way that I can explain it. A mutual fund is basically made up of a pool of money that is taken from a bunch of investors, like myself, to invest in securities such as stocks, bonds, or other assets. Now that we have that out of the way, let's get into the 4 mutual funds that I'm invested in right now. The first mutual fund that I'm invested in is Fidelity's Blue Chip Stock Growth Fund. I wanted to invest in this specific fund because it's important to be invested in what the market thinks are the best funds in the market, and that's what a blue chip is. It's the most expensive chip on a poker table, so it's going to be the best companies, kind of like an S&P 500, but the best performing companies in one fund. Some of the holdings of this fund include Apple, Amazon, Tesla, Facebook, and the list goes on and on. This fund holds a 20-year track record of great returns, and that's also another reason that I'm invested in this fund. The second mutual fund that I'm invested in is Fidelity's Select Communication Fund. I'm invested in this fund because it has holdings such as Facebook, Disney, Netflix, and I just want to be a part of the next social media era, and I think that all of those companies can grow exponentially. This is another mutual fund that has 20 years of great returns, proven returns, and I think it has exponential growth potential. So I think it can go up a lot in the next few years. The third mutual fund that I'm invested in is Fidelity's Select Communication and IT portfolio. Even though I'm already invested heavily in tech, I want to invest in this fund because it's the other side of media. So like Netflix, it doesn't sell a service. I wanted to get into another mutual fund that is on the other side of tech, where they're actually selling the product to the media companies that then put video and games and stuff like that. So I wanted to get in on the other side of tech. This is another mutual fund, and you're going to start seeing a trend here with all of my picks that has a 20-year track record and actually has a small dividend of 0.71%. So nothing too big, but I will be receiving a dividend every once in a while from this fund as well. The fourth and final mutual fund that I am invested in currently is Fidelity's International Capital Appreciation Fund. I wanted to get into this fund just to diversify my portfolio and get it outside of the United States. These are all companies that are outside the United States, so if the United States stock market does crash, I'll be protected and I'll have some of my assets elsewhere. It's only about 23% of my portfolio though. There might not be as many gains in this fund, but it's kind of just hedging my bets. The only notable stock in this fund is going to be Alibaba, which is actually a company I really do like. But again, I am just holding this fund in order to hedge my bets, and because it's not that volatile. I want some stocks that if there's a red day on the market, it only goes down a little bit. But if there's a green day, it also only goes up a little bit. But your losses won't look as bad as if you had just a completely aggressive account. This fund only has about a 15-year track record, so it isn't as good a track record as the other funds, and the gains aren't as good either. But just like what I said before, I'm not holding it for massive gains. I know what you might be thinking. I'm way too invested in tech right now. I'm way too invested in one sector of the market, but there's a reason for that. This is just my starting point, and I definitely think I'm going to get into other sectors as I go on and get more money to put into this Roth IRA. But these are just the ones I'm holding now because I don't see them going down anytime soon, and I'll get into other sectors when I feel like the price is right. As for their performance, I just bought in on Tuesday this week, and I'm already up 5% on my account with these four mutual funds, and I did enter at a good time, so it kind of makes sense that I'm up 5%, but I also have in a smaller investment account, like I said, and I actually am down on that account, but I do have high dividends, so it'll kind of offset the cost whenever I do get those dividends. Although I'm not a financial advisor, the point of this video was to show you guys 4 mutual funds that you can start off with. I suggest you do your own research, open up a Roth IRA, talk to a financial advisor, and narrow down what kind of funds you want to be in, and look at 10-year returns. That's going to be the most important part. Make sure that they have a good track record. Say they do good for this 1 year and it has like 50% returns in this 1 year, but for the rest of the years they were actually in the negative. That's not a mutual fund you want to be invested in, because that doesn't show a good track record of making you money. It's just a short-term gain. Look for the long-term gains, guys. Also, a massive factor to look into when you're trying to pick a mutual fund, see how it's done compared to the S&P 500 in the past 10 to 20 years. That'll help you see that if this is outperforming the S&P 500, I should get it, because that means I don't even have to invest in the S&P 500. I'll actually do better than it. And that is going to be it for the video. If you guys have any questions, please comment them down below. If you guys want to see my other investment portfolio that I also have with Fidelity, that is all high dividend stocks, comment that down below as well. Like, comment, and subscribe if you haven't already. It helps with our algorithm, and we just want to provide value to you guys. So if you saw value in this video, then please just subscribe, like the video, and comment. But yeah, that is going to be it for this week. I'm Zach from Finance Bro, and we'll see you in the next video.